This video is sponsored by Bityard. With over 400 cryptos to trade on their spot, perpetual coin futures, USDT futures, with leverage of 1x to up to 125x, you can trade foreign exchange, commodities like gold, silver and oil, and traditional markets like Nasdaq, all with some of the lowest fees available on any trading platform. You can use their copy trader to copy other traders with better performance than you, or you can become a copy trader yourself and earn a few extra percent from the people that follow you. Plus, you got 9 out of 10 stars from the Coin Bureau guy. Bityard. Hello everybody, welcome back. So it looks like we might be starting the everything bounce finally. So I gave it a 3-week time period to start to see it kicking in. So this month was generally what I was expecting to see, a bit of a green month basically across all major indexes, stocks, and with the opposite take place for commodities. I was talking about this 3 weeks ago. I tried to make a big song and dance about it, and we were updating it yesterday. So we'll just quickly look at the Dixies. So we had that cupping handle that we talked about last week, and that broke out and it moved right up to our target 106.7. Whoa, 106.7 is where it tagged. And it looks like it might want to have a small consolidation before trying to retest and maybe break out from there. If it breaks out for 106.7, we're going to probably move all the way up to above 112, which is a big deal, obviously. But as we all know, you can trade this chart. It's a very tradable chart. We've been saying how bullish this was all the way back down since last September. We said this is going to be a very bullish year for the dollar, and lo and behold, it has been. So called it once again, and yesterday called it right up to the exact resistance level. So I think that we're likely to see a small consolidation on here before retesting that and probably breaking it at some point this year. But we all know that the FOMC minutes are coming out today, and then we've got another CPI inflation data coming out this month, and obviously another meeting with the Fed. So they will do something with the price, But the chart basically points further upside. We should expect further upside until told otherwise. The Fed will let us know if they've had enough of this strong dollar. Yesterday we were talking about how the commodity prices are all coming down. The only one that's failing to break its chart structure is oil. Now this is a weekly, and the weekly is the important one, and obviously this is Wednesday. We're not going to close a week here. These last 2 weeks in a row we've had big moves down, got sucked straight back up above the Bollinger Band Center, so your 20 weekly moving average there, 2 weeks in a row. So even though this is a nice big move down, and it was a pretty significant move down yesterday, we've not closed yet, and until we've closed, we can't consider this to be a change of behavior, but it is good. And interestingly enough, this is something I was talking about again 3 weeks ago when I was talking about the everything bounce. I was saying I'm positioning myself in the top 4 tech stocks. I'm getting into the Dow Jones Industrial Average, the Nasdaq, and the S&P. So I'm getting into all of that 3 weeks ago. Still all of those in profit. In fact, they're more in profit as a result of what took place yesterday, which has been my overall theory, that commodities all likely to come down, all showing a peak, mostly in March, and oil is the last stage of that, where we start to see that come down, and this will reflect on CPI data. So the more we spend on fuel, the less money we have, aka inflation. It's the oversimplified way of looking at it, but that's basically it. So oil down, good for stocks, good for commodities. No, not good for commodities, good for stocks, good for inflation, good for indexes. In the short term, meaning the everything bounce. This is what I was talking about 3 weeks ago. And so yeah, we saw upside on Nasdaq, and again, Nasdaq's technically closed. This is not even a pre-market, and so we're still we're a little bit down now. But as a result of the move from oil yesterday, we saw a green day across most stocks within the Nasdaq and S&P and those indexes themselves. This morning, I just not that I trade them, but I had a quick look at FTSE and the DAX. They're all up as well, ever so slightly. So it looks like the everything bounce is being felt across even the weaker economies and the weaker indexes like those. And what's our mate Bitcoin doing? So Bitcoin moving back up to the top of the range. So again, this is a very real thing that you need to be aware of. We invert the chart just so it's easier to see. We do have a cupping handle forming here, which means that if we come back down, or effectively up to this range, which is your cup top, so we're talking resistances on this inverted scale, but if we put it back to normal, obviously we're talking supports. If we start breaking down below, effectively the lows here of 18,800, our last stop would be 18,000 flat. That's your cup broken there, and as a result of that would be a new move with a new low and a new range. So bad news for Bitcoin. However, if we break outside of the bottom of the cup, which is this area here, this range high, if you're not talking about formation, so we're talking about an area specifically 21,700, breaking and closing above there, will likely have a continuation to a decent extent. And if the everything bounce is, you know, as good as I think it's going to be, which for Nasdaq could yield 10 to 20%, then yeah, you would expect Bitcoin to manage a decent move as well. You know, we're talking all the way up to the summer lows, maybe around 42%. So this is all very realistic, right? And for the moment, you know, Bitcoin unfortunately is range bound in a bearish formation. But you know, whether it's bearish or, you know, it doesn't really matter. It can be invalidated above that zone. So that's what the bulls will be waiting for. Closures above 21,800 and anywhere above on a 4-hourly, or obviously a daily would be even better. Obviously, a weekly would be even better than that. But until then, we are still, you know, I suppose on thin ice. You know, not particularly bullish on the overall picture right now until we start to see some changes of behavior for Bitcoin. But you know, I've been buying Bitcoin all the way down. I've been trading alts into Bitcoin, and we managed to increase our Bitcoin amount by 50% with that move we did about 4 weeks ago. So you know, I'm largely in a Bitcoin position when it comes to crypto, so I favour the upside for Bitcoin. I'm not going to be buying anymore. It's all been bought, it's all been traded. It's been a good 4 weeks, to be honest with you. It's been a really good 4 weeks, despite what most people might think about these markets. It's been pretty generous. It's definitely pretty generous. Volatility can be your friend if you're on the right side of it, let's face it. So let's have a quick look at one last thing to ruin the party a little bit. I spoke about that trade that I made where I bought into the altcoins effectively like for an alt season, which was around this level here, 48.7% dominance. This is 5 weeks ago technically now, and we made a decent trade really. This is where we did 50% generally for altcoins into Bitcoin, so really good trade there over a really small space of time. Now the dominance chart to me is it's in a bit of a dodgy scenario where it's, you know, the main thing we've got to see on this is whether it closes above or below this 20 weekly. So it's always about the 20 weekly for me. It's a big deal. And if we keep closing below there and continue to go down further than where we are right now, I would be looking for closures below this cloud, or below the 100 moving average there, around 42.7. then we should have continuation towards 40. But the lower we go, the higher risk altcoins will be, even though they'll probably be gaining versus their Bitcoin pair. The higher risk they are, because every time we come down to this lower zone, calamity can really kick in. So all your gains that you've worked so hard to trade over the last, well, what would be maybe even as little as a week or two from this level, would just be wiped out in a blink of an eye. So you just got to be super careful as we approach these lower zones for the dominance chart. And again, you know, I did that trade and we're up 50%, so increased the Bitcoin amount I've got by, well, the Bitcoin that I traded, which is 20%. So I was only prepared to trade 20% of the Bitcoins that I have while being so low on the dominance chart. But it was a good trade, and then I closed them because that was the deal. I said, look, between 10 and 50% is what we're looking to gain, and out of the 3 trades that I did, effectively did 50% on all of them. So really good there, and closed them as I said I would, and I said I'd reopen them if things start to turn around again and we start to look like we're going to get continuation for altcoins versus their Bitcoin pairs. But for the moment, I'm a bit hesitant to think that that's the case. I'd rather sit in a Bitcoin position, because if risk assets are going to be fashionable again because of the everything bounce, altcoins will probably move as well, and there's always going to be some altcoins that completely outperform Bitcoin. But generally speaking, it's about risk to reward for me, right? And the risk to reward at this particular moment, as Bitcoin dominance is floating around that will I, won't I, you know, move up or down, I'd rather just stay in a Bitcoin position, because risk assets will move, Bitcoin can move. We've already established that Bitcoin could potentially move up by about 40% from where we're at right now, so that's definitely a doable scenario if that invalidation of the cupping handle, the inverted cupping handle, is met. And so yeah, I'm happy to sit on that. And if it breaks down, then I think this time round, if it does break down, it might be that altcoins outperform Bitcoin on the way down this time, just because of the nature of how the dominance chart would not permit an enormous move at this level for altcoins, generally speaking. But I'm in favour of further upside on the market, and especially if we close oil below $104 a barrel. that would mark a change of behavior on the chart, and oil should start to trend down consistently, maybe even finding a low around about $75 a barrel over the coming weeks or months. We'll have to see, but for the moment it's still just floating around that $100 zone, and that's fine. It's still, you know, below my criteria for a change of behavior and a breakdown on the chart, so I'm okay with that, but I won't be convinced until this closes on Friday. So for the moment, yeah, Bitcoin's still range bound. Center of this range. The cup in handle needs to break, which is 21,800, and then continuation could easily take us all the way up to 28, 29, 30. It sounds unrealistic, but it's not really. It's not really. We've got momentum building continuously on the MACD on the daily here. Same with RSI and money flow index. Let's have a quick look at the money flow index on the weekly. So the money flow index on the weekly is still pointing down significantly, so that's not of great concern, but it's kind of like a bittersweet scenario. So we were looking at it this time round when we managed to reach this low on the dominant on Bitcoin's money flow index, and we were saying that's pretty low. That's a significant low for the money flow index, the lowest it's ever been. Well, not ever been, but one of the lowest it's ever read in its entire history. This is definitely the lowest it's ever been in its entire history. I think there's only one read about 9 years ago which showed lower than that, and this is spot selling, right? Lots of selling. Now it's going to be very difficult for Bitcoin not to generate bullish divergence on the money flow index at this level, which means that obviously to get bullish divergence, it means we do require a new low, and that's fine. To welcome a new low is perfectly fine, but it would mean a new low as far as price action is concerned. So maybe we see some upside on Bitcoin now, maybe bringing us up to the summer low, the summer. Well, I suppose they're the summer lows. They're obviously now our resistance, right? But we're still in this giant consolidation, bear market, descending triangle formation, and this is due to end, as far as the cycle is concerned, between September, October, November. So we can be, within this formation, no problem, find a low, and then break out, causing bullish divergence to take place on the money flow index on the weekly, with a new low, maybe 10, maybe 12, maybe 14, maybe 16,000. I don't know where the low will be, but it does require a new low to form. It doesn't mean it's going to happen immediately, but in order to get the same reads that we've had in the past, and I've backtested this outside of just this Binance chart really, but we get new lows formed and higher lows on the money flow index, forming these big bullish divergences. Here's another one here, and each one of these spots the significant low. So we've got a low here, big drop down, higher low, low here, big drop down, and a higher low, and these basically mark the absolute bottoms. So I would be looking for the same kind of thing to happen again, and with money flow index so extremely low, like I say, it's going to be very difficult for it to not get bullish divergence. But this is a weekly. We could be talking months, and in all fairness, we should be talking at least multiple weeks before something like that happens. So I favour the everything bounce. I think we are probably going to break out of that inverted cupping handle with the nature of the commodity market at the moment, and the everything bounce looking like it's going to pick up a gear. But look, we are at the mercy of the old men at the table. We'll have to wait and see what they say. We'll have to see what inflation data says, because all of that's going to have an impact on the market as well. But charts alone, I think the rhythm is relatively clear. If you're looking to get into Bitcoin safely, you could probably just wait this out. Even if we move up by 40%, just remember we're in a giant consolidation, a giant bear market, and a giant descending triangle. So trading within triangles is usually a bit of a mug's game, to be honest with you, and it's only really when you trade out of it you have some degree of confidence that it's going to continue to move up, because the major area of resistance is broken. So just wait for that. If you're a little bit more conservative, trading in, like I say, trading inside triangles are, they're not. It's not a great idea. It's for the heroes and the ones with happy to throw their money away. But there is a good chance that we move back up to the summer lows, the 28, 29, 30, maybe this month. Not immediately. Remember, well, it's all about invalidation levels. Breaking down below 18,000, certainly going to likely trend further down quite quickly after that. Breaking out from 21,800, probably going to find our way up to that 29,000-ish area. Right, I'm going to leave it with you there. Thank you for watching. Hope you have a nice day and take it easy.